Hello, Super Traders. This is a special edition of our Trading the News before the U.S. interest rate hike. Hello, Yaron Mazo. How are you doing?
I'm great.
Are you excited?
Of course I'm excited. But you know me, I'm more than ready
You
for this
had
kind
an
of event.
you had an idea for the past couple of I would even say the past month or so for what's going to happen.
Yeah, but I really like those kind of events. I'm excited, but I'm ready.
We're
and
excited.
This is
We have
very
our
important.
glass of wine because
Yes.
we had to. I was telling Yaron to bring me wine yesterday, and he did. Touche.
Yes.
Good job. And cheers for you guys. So first of all, the interest rate hike is somewhat of a major event in all global markets. So
Correct.
let's first have a look and understand a little bit more what interest rate hike is all about. Let's take a look.
On Thursday, September 17th at 6 p.m. GMT, the United States Federal Reserve will announce the official federal funds rate. The federal funds rate is defined as the interest rate at which depository institutions lend balances held at the Federal Reserve to other depository institutions overnight, meaning a short-term loan. This rate decision has been getting a lot of attention talk for a while now, but what is it all the buzz about? Why does the interest rate of the US economy make such a difference to global investors? To explain it simply, one of the ways in which the central bank controls credit is by changing interest rates. When interest rates are high, people will borrow less, and when interest rates are low, borrowing will increase. The US economy has been suffering since 2008, at which point the Federal Reserve lowered interest rates to 0.25% within a year, and rates have remained there ever since. But now that the US economy seems to be getting back on track, economists and Federal Reserve members expect to see an interest rate increase this month. Although the increase could be as small as 0.25%, this still has a major effect on investor sentiment because it means that the US is headed for even higher interest rates in the future. This hike will cause investors to decrease borrowing and increase investments in the US dollar. The more US dollars that are held, the less money will be invested in the US stock market. As you can see, this interest rate decision does not affect borrowing, but it plays a major role in global market trends and sentiment. So what do you think? Is it time for the US Federal Reserve to begin liftoff of interest rates from the current lows of 0.25%? Watch SuperTraderTV's live shows for in-depth analysis and expectations regarding this important economic event.
And we are back. So this is what the Fed interest rate hike is on, and the interest rate is all about. But I do want to ask you, Yaron. Today we're looking at the U.S. market. This is a major event. Obviously, we're here on this special edition. We even have wine. Obviously, this is pretty major. Why is the U.S. interest rate hike or non-hike is so important? How is it affecting the global market?
Well, it's as simple as that. The US market is the pinpoint of the entire financial market. Actually, the S&P 500, which is the main US index, it is serving as a leading sentiment indicator for the global financial market. It's everything starts from the US market.
Okay.
So
That's where it all starts.
That's what it's all about. That's it.
Is it even more of a major event considering everything that's going on with China?
Well, now here is the thing that I would like to emphasize. There is way too much focus and anticipation for this particular monetary policy decision, but I think that it is more important to focus on the tone today rather than the actual print. And of course the pace of further hikes in the future, which is much more important from this particular event.
Because we were mentioning in the news, it's not only the decision, but it's
Correct.
also projections for the next 2 years.
Correct.
So basically, this is what you're talking about when you say the tone. What's going to happen in the next
Correct.
2 years in the US, and therefore what's going to happen in the global market economy, considering everything that's going on in the US, the major economy in the market at the moment.
Correct. Absolutely right. I think that this particular event is going to impact the market not more than 2 days. That's it. We will see higher volatility. We will see some market action. Everything is consolidating right now. Nothing is moving so much. but we see that the euro is moving a little bit higher, and this is my expectation from this particular print.
Okay.
And we are going to trade euro versus the US dollar today, right after the decision.
The decision.
Yes. So it doesn't matter. It doesn't matter what will happen in this particular print. It doesn't matter whether we were wrong or right. We can still make money, and we can still
Find an opportunity,
be
a
profitable
trading
and
opportunity.
find a trading opportunity. What we are going to do as the actual result doesn't really matter for us as traders. We will trade with the prevailing direction, with the prevailing momentum actually that we are going to see, and that is going to generate in the market after the results. But we are not going to trade immediately after the results.
Always
we
waiting
are going
for 5
to
minutes.
We are going to do it step by step. We are going to present the market as it and the movements as they happen. But you have to be very careful when you are taking a trade. Now take a look what we are going to do after the print. Watch us step by step and understand how the market is working, how the market psychology is working. Today we are going to have few cycles of movements, and we are going to present them.
But
It
before
is
that,
a
before
great
presenting,
education session.
Okay, and before going into the education, you were mentioning that it's not really about the decision today, but rather the tone. And you were mentioning that you think that the rate hike will happen maybe December or early of 2016.
Correct. And why is that?
And why is that?
Okay, let's take a look at my logic.
Let's take a look at Yaron's logic.
Okay.
It is really spread out, and really, Yaron did his homework before he came here
course.
today. We hope you did the same, and you had a whole logic.
Correct. When I say I was born ready, that means that I
means
already
that you did the
that I
research.
already did my research.
Fair enough.
There are things behind my
Of course.
readiness for this event.
So what is your logic, Yaron?
Okay, everything starts with the Fed, of course, with Yellen, and Yellen said, and she keep on saying, interest rate hike depends on the health of economic activity.
And that's where it all starts
Period.
from.
Yes, I'm warning you, Janet. You still
Of course,
haven't,
Janet is seeing
you still
this
haven't
before.
abandoned course, and you are not going to do it today.
Of course. And so basically, and you were saying, we are experiencing less volatility in the market,
Correct.
but uncertainty is still a major theme. And then you said the U.S. economic activity took a step backwards during the last trading week, with inflation data falling short from expectations and consumer sentiment plunging to the lowest level in a year. Then you were saying that it is very important to understand that lower sentiment begets lower purchasing activity, begets lower GDP, and that should lead to lower equity prices. And then you were saying that add to this fact the concerns that are coming out of China, and the market sentiment continues to have a negative bias.
I will add few more comments here.
Okay.
We saw the Philly manufacturing index coming in worse than expected, worse than the previous months. So what do I have to say? We have the bottom line, although the yields are pricing in a rate hike.
Okay.
The yields are pricing in a rate hike for sure.
Uh-huh.
But this fact is out there for months.
So what is the bottom line?
The bottom line,
Yes.
you know what I'm thinking. You know what I said, and
I know,
we are
and
going
you
to
were
see
mentioning
it,
the Fed
but
should
The
wait.
Fed should wait at least until December before raising interest rates.
So this is your logic today, but basically it's been your logic for a while. And you were mentioning, actually in yesterday's session, we were talking about it. We were here with Dennis Center, market and our other guest market analyst, which we love so much. And I love her, it's true. And we were talking about the fact that CPI will be the last nail in the coffin of the rate hike today in Thursday, September 17th.
Correct.
And you were actually even right about the prediction of what the CPI is gonna come out at. You were mentioning it's gonna be 0 or minus or a little bit lower than that. I think that we do have a little segment of yesterday's show. Maybe we take a look at it. So let's talk a little bit about the interest rate hike and everything that's going on around it. First of all, you've mentioned last week that today, Wednesday, September 16th, with all the prints, with all the data that's coming out of the US, we will have a better indication, a better idea as to whether yes or no, we will see a hike tomorrow. And you're saying no. Indeed, because the prints came in worse than expected.
Yes, there is only one print that will provide me with the last validation.
12 minutes to go.
Yeah.
12 minutes to go. The last validation or last conviction
Will be there
for interest rate.
The CPI.
Yeah, the CPI, it's Consumer Price Index. Capacity utilization came in worse than expected. Retail sales came in worse than expected. I would wait six more minutes.
Say again that you said a week ago the probability for the interest rate hike moved from 28 to 32.
Yeah.
So someone does believe that it's getting more and more closer to the hike on September. I don't know if that will make the difference.
I don't believe it.
6 more minutes and we'll have a better understanding when CPI print will come out from the US.
I will say my last word 6 minutes from now, but I don't believe it. I don't believe this 32% and so on. I don't believe it. I believe numbers. I believe results, bottom lines. That's what I believe in. And we have a way to measure it.
Maybe someone knows the CPI. Inside information.
Shall I take a guess?
Of what?
The CPI?
The CPI, sure.
Write it down.
Okay.
Type it down.
There's a computer in front of you. That's a new thing that there's little boxes. Zero CPI. Maybe even lower. Okay. That's all I'm trying to do.
And then we're gonna just see.
Yeah, we're gonna see in a little bit.
Exact number.
Yeah.
Is it out?
Is it out? Is it out? Is it out? My computer will always take the longest time. Beep, 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 beep.
Minus 0.1.
Minus 0.1? Is that? Did you see it already, or are you
Can you
minus
replay? Can you please
0.1?
replay?
Minus
You have
0.1.
the applause.
Now, ladies and gentlemen,
Our special effect guy
listen.
will do
I know what I'm going to show you tomorrow. Mark my words, please.
Don't tell them, then they won't tune in to see us.
There is not going to be interest rate hike tomorrow, and we are going to present this segment just before.
So that was yesterday, and seems like you had a very clear idea as to what's going to happen.
Yes.
Today's with wine. Yesterday was not with wine, and it was that way.
I forgot one item.
One item.
Yeah.
Tell me about it.
My hat.
Oh, right. You said you're going to bring a hat.
Yeah, maybe I'm going to eat my hat. Because
Probably not, though. Probably not. We don't know.
We never
Yesterday
know.
it was 28%.
We never know. Last week it was 28.
Last week it,
and then
speculations
32.
for a rate hike. Today was 32. So just hoping. And basically you were saying it yesterday, if we will see a rate hike, and I think you said it this morning too, that if we will see a rate hike at the end of the day, that's gonna drag the S&P down all the way.
Yes. Okay, let's speak about the typical reaction of what is going to happen in let's take our scenario.
Okay.
If we are going to see we are not going to see interest rate hike. If the interest rate hikes will remain the same. A typical reaction would be as follows. Of course, it's on the short-term time frame, only short-term time frame. I'm not looking at the long-term. As for now, there is a difference between the short-term and the long-term. So,
and you were mentioning that all the actions that we will take today is until Friday.
Yes, at least until Friday. Currently, we see the picture. We already see the picture.
Okay,
the
let's
euro
take
is
a look
moving
at the
higher.
platform.
The US dollar is depreciating. The euro is stronger. The pound is stronger, but the euro is stronger. The strongest currency is for now. Now the stocks should drift higher. Oil prices should move upward, alongside gold, of course. US dollar depreciating, oil and gold
as
are
always
appreciating. This is the right
same
correlation
as always.
Exactly. We are 30 minutes before the print.
30 seconds.
Again,
30 minutes.
seconds.
That would be a long show.
Yeah, I know. Again, you're lucky me that I have you here. But it doesn't matter so much. Again, whether I'm wrong or right, we will take the action respectively. Let's take a look at the market. The market is moving higher. The US dollar is depreciating. We are going to trade euro versus the US dollar.
You sounds like a sport broadcaster today. Okay, let's see if there's anything coming out.
I'm excited
Did you see?
now.
Did you see? I'm not getting it. I'm not getting it. Not yet.
Not yet.
Because my
But
clock is saying
take a look at the euro. I already
Okay.
know. I didn't get the no interest rate hike.
No interest rate
I
hike.
would be
we
very,
didn't
very
get
surprised.
we didn't get the decision yet. Oh, we did. No interest
No,
rate hike.
no. All the bankers
Thank
that
God
talk
you
to me
didn't bring
today,
your
all
hat.
the bankers that talk to me today, the institutional, eat your hat.
I'm gonna drink wine while we do that. Cheers. Cheers for the
Cheers.
speculations that were right now. Yohan, take a moment after you sip your wine, explain what has
Okay.
happened and what's gonna happen
Okay,
next.
the euro is moving higher, the US dollar is depreciating, everything is just as we expected. But, and this is the big but, we are not going to trade yet. Usually we are taking immediate
5
trades, we can ride on the momentum, 1 minute trades, click the button, but we are not going to do it now. We are going to educate, we are going to show you how things should be done properly.
Okay.
Now, with us in your computer is our research team that provide us with
True.
market information.
Yeah, I
step
see
by
they write
step.
that it's still
We
there's
are
still the
going to-
dots and everything.
As I
but it's
mentioned,
coming.
it's not important. The actual print is not important. Now the U.S. market
tone.
should move higher. The S&P should break out the 2,000, and the Nasdaq should fly to new highs, and the U.S. dollar should depreciate. Oil prices should move higher. Gold should move higher. I didn't see the market. Just a minute. Gold 1,102. Okay, the gold is moving higher. Oil didn't move yet, but we can see clearly that the US dollar is depreciating. The S&P 500 crossed the 2,000 mark, but this is the first wave of the movement. In my view, we are going to see the euro moving to 114, 115 euro dollar pair. Now we are going to take tomorrow's expiry time. We're going to take long-term trade. The expiry will be September 18th, Friday, of course, tomorrow, 5:10 GMT time, PM GMT time. But let's wait a little bit. This is the first wave of the movement. I would like to hear the tone, the monetary policy tone, the words behind the decision. It is very important to understand it, as these words can change the market direction dramatically.
So just like you said, the
Yes.
decision is already here, and thankfully, Yaron, I have to say, you were right the whole time. It's been a month now that you've been
Yeah.
saying it. Yesterday, the CPI, just on the dot prediction as to how the CPI is going to come out, and then the prediction as to what Janet Yellen is going to say today. But that's not
Okay.
all. Right now is the
Correct.
tone for
Correct.
the next couple of days, and
Correct.
that's the way to take the best trading opportunity of the day. And you have that for us too.
Yes, correct. But I've learned from my previous mistakes, and I lost a lot of money on those mistakes. I knew how to predict the market. I understood what is going to happen, but all of a sudden everything changed, and I didn't know why. Now I'm going to take the right decision, smart decision, but I have to wait a little bit more until it's time. The first 5 minutes, we are definitely not going to take
as
the
we
trade. This
can
is
see.
the first wave. The first wave is very clear, in line with the market expectation, in line with the print. But after 5 minutes, everything can change. And I saw such movements in the past. Let's hear Janet Yellen. Let's hear the Fed. Let's
Taking a couple of moments to see what she's
they are going
mentioning.
to. You know, they can change the picture dramatically now, only by saying in December we are going to hike. It's going to be very clear, and the pace is going to be like 1, 2, 3, 4, and so on and so forth, and the market can change easily.
Can change.
Yes, but until now we were under range-bound trading activity, and there was no clear direction. We don't have a clear direction yet. And until that very moment, there is no downside or upside catalyst, and we didn't get it from the Fed. Nothing should change the market direction.
What do you mean about nothing
dramatically.
can change the market direction?
Nothing. There is no catalyst for breakout. There are no
Even
terms.
though there was a decision at the
So
moment,
what?
even though there
So
was an
what?
interest
The
rate.
US market will move
So
higher.
basically, everyone got excited about the rate. Yaron was right about the rate. I have to say it. Like the whole time, Yaron was right about the CPI. Touche for that. And now seems to be that the rate hike doesn't really matter. So Yaron was right the whole time and no one cares. That's great.
Okay, I would like you to stay close with our research team.
Yes, absolutely.
I-
We're still waiting to hear a little bit more as to
Okay.
what Janet Yellen is saying. Apparently, we are not sure about the exact words of what the tone is going to be.
Okay,
So we're going to
but
wait for that.
Looking at the S&P 500, all of a sudden, it is depreciating.
Yeah.
We saw the market moving to 2010, and now it's 1994. Back in time. But
What do you mean back in time?
2010, 2011, 2012,
Okay.
and all of a sudden we are not back to the future, but we are moving in the time tunnel to 1994. But again, I'm still waiting.
Still
We have to be
waiting.
very,
We still
very
need to
careful.
wait until we're taking the trade.
Yes.
Just
We are
a
going to take
reminder?
a trade. We are going to take a trade on the
And just
euro
a
versus
reminder,
the US
yes.
dollar.
Okay.
Let's take a look at our trading platform. I don't want to disappoint you. I'm going to take a trade definitely
Yeah.
today. But looking at the trading platform, what we choose to take, we are focusing on the long-term product in binary option. We are focused on the binary option right now. This is our product. This is our friendly trading platform. We are selecting the long-term product in order to find trades that are at least one day ahead from the rate decision. Our expiry time is clear and set. 18th of September 2015, 17:10 GMT time tomorrow. The amount is going to be $100. I'm doubling the basic
Doubling.
investment per trade because we have more than
Okay.
90% success on this particular trade. It is 0.2% from our total equity. We have $50,000 equity in our account. This is our account balance, the initial account balance. Usually our basic investment per trade is 0.1% from our equity. Now it's 0.2 because we have higher probability of success. High probability of success allows us to increase the risk exposure. That's what we do. And this is a part or a rule of thumb under our money management
Fair
system.
enough. So is it by now time to take this trade, or do we need to wait a little bit more for the market to?
Well, the market has a clear. The first direction was very, very clear.
Yeah.
The euro is bouncing. In my view, we are going to see 115 in the upcoming days.
Okay, in the upcoming days.
We are going to move to range between 114 to 115.
Okay.
Euro versus US dollar pair. And
We
this
do
is
see
what
some of the statements for the committee by now. They are talking about the fact that considering the data, they couldn't afford to hike the interest rate at the moment. The committee anticipates that it will be appropriate to raise the target range for the federal funds rate when it has seen more further improvement in the labor market and is reasonably confirmed that inflation will move back to its 2% objective over the medium term. I'm sorry, Yaron said that. Are you speaking to Janet Yellen without my knowing?
No, I'm not speaking to Yellen.
Okay,
I'm
so what do you do?
listening. You have to listen. First listen, then interpret, understand the market. And very important, what I've learned in this particular print, and it's a new thing for me as well, as a professional trader, as a veteran trader, is the fact that you have to ignore white noises.
Okay.
Bankers, institutions, all these people that are rubbishing,
Hovering
ignore
over
them. Listen to the right
logics.
people. Listen to the guys that are, or to the ladies and the gentlemen that are responsible for this particular reading. And that's what I did. I ignored the noises. I ignored everything. I ignored the numbers. 28, 32, Who cares? Janet Yellen, and I started with my logic, with
Her statement.
clear statement. Interest rate hikes equals improvement in economic activity. Period. That's it. And that's what I was focused on, and that's what and this is how I made my decision. It is time to trade.
It is time to trade.
Correct. Okay. Long-term product, euro versus US dollar. This is the
Okay.
asset. Equity, expiry, 18th of September.
You're
tomorrow.
already thinking about the equities. coming up.
1710. 100 US dollar, please.
100 US
Yes.
dollar.
Yes, correct. Double.
Double the amount.
Double the amount that we usually took, because we have high probability. This is a part of money management system again.
Yes.
Call position, taking this pair to the upside. Buy US dollar for the next couple of days. That's
Done.
it.
Done.
Done deal?
Done. Okay, so basically,
Cheers.
cheers. Long term, the product was long term because you want to take until tomorrow to price in all the movements in the market, basically to take under consideration, not price in, all the movements in the market. We are talking about the euro versus the US dollar. We've taken the expiry until tomorrow. We doubled the amount that we're usually trading. One more time, we want
I
to.
feel confident.
You
Even
feel confident.
the oil is moving higher now.
But we wanna remind our super traders that it's still the usual amount that we are trading is 0.01%.
0.1% from our equity, from our entire
yes.
equity, from
and
our
right
account
now we
balance.
double it, but still it is just a fragment from our total amount. So whatever amount you have in your own portfolio, you need to take that under consideration, even when it's so clear and when we believe that there is such a clear opportunity.
Couldn't say it better.
Okay, and we are looking at the fact that one Fed member voted to rate hikes, one member voted to decrease rate by the end of 2015. The Fed will wait and see how the global economy grows and move
It
based
doesn't matter.
on that.
Again, white noises.
Yes, but white noises.
Move
okay.
the white noises
Fair
out.
enough. I wonder who that was from the Fed members.
The one that was scratching his nose. I don't care, really.
White noises, as you were mentioning, white noises.
Absolutely.
Okay, Yaron, I have nothing to say. You were absolutely right. In the
Okay.
past couple of days,
Thank you.
we'll call
Hopefully
Dana because she was a
we'll
little
make good.
skeptical. So we'll call Dana and we'll let her know. Dana Sender, our other market analyst. We were able to take the trade. We said that we will take a trade whatever the decision is going to be. Our speculation throughout the past 2 days, if not even more, was that this is what's going to happen, especially after yesterday, after Yaron's speculation was right and CPI came in worse than expected, minus 0.1%. After that, it was pretty clear there won't be a rate hike, but we were saying that we will take a trade regardless. Once we got the trade, we waited for the 5 minutes for the volatility in the market, for the first movements to appear, to come and to go, and then we were able to take a long-term trading opportunity using our long-term product until tomorrow, waiting for everything to be considered, and we were able to double the amount that we usually take. Yaron Mazor, thank you so much for all your inputs.
Thank
Thank
you.
you for being right, Yaron.
Thank you, Ronnie.
Thank you for that.
Thank
And
you
thank
for
you for
being
the
there for
wine.
me. Thank you for correcting me in the hours, minutes, months, and so on.
And I am waiting for the next time we will
Yes.
meet again. It will be next week when we will have more opportunities. It's not only
Always.
those
We
major
always
events
have opportunities.
that unfold major opportunities. There's always an opportunity. There's always a trading, a way to trade the market. And
I
this
love
is what
my
we're
job.
for.
I love my
This is
job.
what we're here for.
Yes.
And Yaron loves his job. I do
Correct.
too. Super traders, if you have any questions or concerns regarding the rate hike, regarding anything else, you can always email us at info@supertradertv.com. We'll drink our wine, enjoy the trading opportunity, hopefully enjoy the profits we will see from the trading
Absolutely.
opportunity tomorrow.
There is
And
no other way.
Yes, and we will see you next week with the weekly updates, with everything that's going to happen next week, and with our live sessions. Yaron Mazor, thank you again. Thank you, Super Traders. Have a great weekend.